Good afternoon, good evening. This is Brian Stoll for Timing Strategies, Wednesday, December the 5th. First thing I'd like to make a note of, we've been having a little bit of difficulty with our technical equipment here, so the posts over the last 2 days have not shown up on YouTube. We're trying to fix it or figure it out why it's not. But we'll kind of update those a little bit. If you'd like some clarification, you can go to our current positions page, and that'll also give you a little better understanding of where we're at. So that's why we've missed a couple of days. But let's get right down to it. Here we are, S&P, spiders. What we're seeing here is obviously, in no uncertain terms, bear market rally, in my opinion. How high is it going to go is the only question. We've got the gap underneath here, so now let me back this out a little bit. We've got the gap right underneath here from Wednesday last week. That will get filled. There's no question about that. Just a matter of when and how high is it going to go, or how much higher will it go before it does decide to fill that gap. And you don't want to be long when it starts to fill that gap, because if it does, certainly that low that we put in down here is, that's the Maginot line, that's the scrimmage line. And if it breaks that, which I feel very confident that eventually it will, just a matter of when and how to position correctly ahead of that, there's going to be blood. But certainly if and when that does happen, there's always the if, hopefully we're positioned on the right side going into it, and then if it does happen, then we're looking to, lick our chops and potentially go the other way depending on price action. But so let's take a look at what we're seeing right now. We're moving back up into this range. By the way, we got Hanukkah coming on right now, so happy Hanukkah to all our Jewish friends. I got a few of them, and hey, God bless. Merry Christmas and happy Hanukkah. And so we've got this thin market. Hanukkah kind of, as we get closer to the holidays, things get thinner and thinner. We're moving up. Had a little bit of better volume today, but where is it going from here? I'm looking on the spiders somewhere around this level of 150 half, 150.46, as high as 152. What's that going to equate to on the S&P cash? Let me just go there real quick to kind of give a little, it's just a correlation, just move the decimal point, but it's not exact. So we're looking right here, let me get rid of that real quick. We're looking somewhere around the 1500s to as high as the 1520s. And again, that's a broad range, but at that point, what we're going to start looking to do is more than likely start to initiate a short position, and depending on price action, are we going to scale into that, or are we going to put the whole position on all at once? But again, somewhere in this level between, as low as 1500 and as high as somewhere around 1520. Again, depending on how it gets there. And again, what that will do is put us right in line with our regression channel, going all the way back to the our trend line, if you want to call it that, but there is an element of regression to the trend line. It's not just a straight line in that fact, although it looks like it, but it's not. All the way back to the June-August lows of 06, to our March lows, and then again what basically held us on the bounce. So if we can get a test back up into that level based on price action, and incidentally, if it goes as high as the 1520 level, as high as 1530, what we want to make sure is that this line right here, where the Fed cut rates for the second time back on October 31st, if we can get a close back above there and back above that regression line, that trend line, then I will concede that I am wrong for the temporary time being. We may go flat, we may go long slightly, but right now, again, we are long 100% as of this day. Back on, and you can again check our archives. As of November 20th, we were long 100% from there. We took 65% of that long position off, so we are only 35% long right now. And looking, again, see a little more follow through, and we'll keep you updated with our videos as to what we're doing on a day-by-day basis, as long as that works for our tech, for our tech department, as long as it works with the YouTube servers that we have here. Another interesting note, if you want to look at the SMH, again, we are long that. We've been long that for a little while, kind of waiting for it to come in. It's just, just starting to show up here. Sun's starting to rise. We've been long for a while. Not a huge position, depending on account size, anywhere between 10 to 25% of account percentage-wise account value. Interesting point I want to bring up here also is DX. Whoops, not that. Sorry, DX space pound F is the dollar. Yee! We got long. You know, we didn't post this yet, and I'm going to post this tonight. We got long the dollar right here on November the 29th using the Ridex 2 beta long US dollar fund. Is this a dead cat bounce? Absolutely. How high can it go? 5-10%. You know, everybody's talking about the dead dollar. You know, we're looking for a trade back up, at the minimum, back up into that 77.5, and potentially, you know, from the lows, we could see a 10% move. Where that would take us to, let me give you a quick look. You know, a 10% move back up in the dollar, I mean, that's pretty optimistic, but over time, you know, that could take us back up to the 80, 82 level. And, you know, in the short term, a 5% move, minimum move we're looking at right now is about a 5% move. That's our target, right about that 78 level where it broke down prior to, you know, the big rapid sell-off. And again, if we go back on a multi-year basis, you know, again, 80 is not a difficult target to achieve, but again, somewhere around that 79, 80 level on a daily basis going back, it's a very easy to achieve target. And again, we do have a long position in the 2 beta long dollar fund. That also means that we have a negatively, doesn't always mean this, but what it also for us is that we have a, dang it, I always miss this. And I don't want to use the R $TYX. Never mind. Let me try this one. RYGWX. Never mind. We are short bonds, U.S. government bonds, using the Ridex 30-year bonds, and again, that's just a 1 beta fund. So we're about 10, depending on account aggressiveness, risk profile, we're about 10% short, 10 to 15% short U.S. government bonds using the Ridex Inverse Government Bond Fund, and we are long the U.S. dollar, anywhere between 10 to 20% as well. 10 to 15% on the bonds, 10 to 20% on the dollar, and again, we are still long 35% of the spiders, or you know, the basket, the indice baskets, the Dow, the S&P, and the Nasdaq. So really, what we're working with here, if we're wrong, worst case scenario, what I don't want to see is this market come back down below the low of Monday on the spiders at, you know, about 147.5, and at that point, on a price basis, 147.5, 147.25. I don't want to see that low get taken out. If that happens, all bets are off. More than likely, we're headed down to close that gap sooner than I anticipated. We will go flat. We may go short depending on the price action, but so far for now, things are looking very strong. The momentum's to the upside, but we will, again, that momentum we are looking to sell into, and I'm anticipating that time to be starting tomorrow, December the 6th, Thursday, all the way up until Monday, Tuesday of next week in December, up to the 10th or the 11th of December. So we may scale in, again, depending on price action. The banking sector, let me give you a quick look at the XLF. You know, again, just a real miserable, miserable indice. The banks are really vomiting their bile all over the public and hiding behind Washington and Hillary and Hank Paulson to try and say, oh, we've got to save these poor people. They're not interested in saving the poor people. They're interested in saving the billionaire boys club up in, you know, the Hamptons. So, point being, though, you know, a little money in the short term can go a long way to influence perception. This XLF, if this can break back above that high on the XLF of about 31.5, close above there, then we're looking back up into the 32.5 level. Ultimately, I really think it's going to fail. I really think it's going to fail, and we're looking to get another short position on, and that using the ETFs with the SKF and also the real estate fund. I don't want to screw this one up, IYR. Yeah, figured that's what would happen. That's a spread chart, so pay no attention to that man behind the curtain. Software. So again, we're looking to get short the XLF and also the IYR going using the 2 beta negative ETFs, the ultra shorts. But where is that going to come in at? As high as 31.50. That's probably the first point that we'd look at. I mean, as low as 31.50 starting maybe tomorrow, or as high as 32.65. And again, it's all based on price action. We don't predict, we just respond. So until then, take a look at our current positions page, our tab. We're going to update some stuff there tonight, hopefully, if everything works well. Please feel free to give us a call if you have any questions about what we do, how I manage money, any communications whatsoever. Give us a call, 1-800-675-2131, or you can send us an email from the website. Other than that, hey, Happy Hanukkah, Merry Christmas to everyone, and try it again tomorrow.